All right, there we go. Welcome to today's session. Let's officially start the session. This webinar is called The Successful Investor. My name is Brian D'Amico. I'm really excited about this webinar because I'm going to be showing you how you could be buying and selling stocks, just regular old buying and selling of stocks. Nothing super fancy, right? No in-depth technical analysis or options trading. It's something that you can definitely do. Just plain old buying and selling stocks the right way in a low risk way that doesn't take a lot of your time. You could still be consistently outperforming the market using this technique as well. Right? Our target is to be averaging 15% per year. And some people say, oh, 15%? Well, that you're probably doubling what money managers are doing or better. And if you're getting 15% a year, you're doubling your money every 5 years. And if you actually sit down and do the math on that, I sat down with my daughter and did it. It is amazing after a certain amount of time how big the portfolio gets, the compounding efforts there. So that's our target, to average 15% per year. Some years, of course, will be better. Some years might be rough years, might be a little bit less. But on average, it means you're going to be, like I said, doubling your money every 5 years. I'm excited that you're here, because this information has changed my life. I've seen it change the lives of so many people that I've worked with over the years. So you are definitely in the right spot today in today's webinar. One thing I did want to get across is that until you know what we're going to be covering today, right, until you know how to take control and make money in the stock market, you're going to be at the mercy of outside forces. And especially right now, you don't want to be at the mercy of outside forces, such as when you're allowed to take your retirement, how much of your retirement you get from, here in the United States, from Social Security. You don't want to be at the mercy of what the interest rates are. You don't want to be at the mercy of inflation. You don't want to be at the mercy of those outside forces. You want to be the one in control. And my promise to you today is that you can safely and steadily grow your portfolio every year, right, without taking unnecessary risk, and with the confidence of knowing when to buy and sell. All right, that's my promise to you in today's webinar. We're going to see how you could do that. If there's one thing I do want you to remember, there's a theme that we're going to have today. If you get nothing else from today's webinar, understand that your system determines your success. And the system are the big three that we talked about before the session started: when to buy, what to buy, and when to sell, which is why in today's webinar, I broke it down so that those are the three main themes throughout today's webinar. One thing I did want to mention is that some of you here in today's webinar, you might already be good at investing. If you're good now, learning what you're going to learn today will make you even better. If you are struggling or not confident or even unsuccessful right now, you'll be able to turn that around and become successful. Sound good? All right. Again, my name is Brian D'Amico. That's to put a face to a name. That's me on the right-hand side. I've been here at VectorVest working with investors for over 20 years now. In fact, I'm part of a bigger team here at VectorVest of instructors in our education team. VectorVest has been around since 1988. We've got an entire team here to help you, and I'm confident that everything I'm going to show you in today's webinar will help, because it's helped a ton of other people just like you. Right? Now, when people first come to us, and we talk to a bunch, when people first come to us, a lot of times we hear them say certain things. And as I say these things, if you're in the same boat, can you let me know in the chat box? Like I said, this is an interactive session. So let me know in the chat box if you're in the same boat. People would come to us and they say, oh man, I'm a little frustrated because my account's kind of going nowhere. I feel like I'm spinning my wheels. Like Keith's like, I'm in the same boat there. Many people say, I'm worried because I won't have enough money to retire. I might have to scale things back. I also have to scale back my lifestyle and live the quote unquote ordinary life, or be dependent on other people. Yeah, Gary's like, yep. And they tell me what they really want is to just consistently grow their account. It's amazing that, I hear a lot of people say they just want to consistently grow and can make their account bigger and bigger over time. Not necessarily that like, oh man, I want to make 300% this year. No, they just consistently grow. That way they're also confident that in themselves and that they could be self-sufficient. Look in the mirror and say, I could do this. Right? Yeah, Jane's like, yes. All right, so they also want to be able to provide for themselves and their family. If you're like me, I'm starting to see the bills come in because my children are now graduating high school and college is coming up. Wedding is, I'm sure, eventually down the road. And as you get closer to retirement, you've got other bills that are going to be coming up. So I want to give you that freedom in today's webinar. So here's our journey today. All right. Here at VectorVest, we know the things that work consistently. And my goal today is to show you how to fix the things that you might be doing wrong. All right, so we're going to be looking at the exact criteria that you need to use to pick the right stocks. That way you're not sitting there wondering or thinking, what should I really be looking for? Is this the right one? All right, so we're going to look at the exact criteria to use. We're going to look at the 3 keys to determine, when is the right time to buy. We're also going to be talking about when to sell, which a lot of you typed in earlier before today's session started as one of the hardest parts for you. All right, so today's webinar is built on results. It's not just on testing or hypothetical things. It's built on results. Not only the results that we've seen here at VectorVest, but on results of real people just like you, who we've worked with, who've gone through this training that you're going through here today. I'm going to show you what they've done to get the results they've gotten. And a few of the people we're going to be talking about today, we'll talk about Ross. He told me prior to learning the system, his trading was haphazard and time-consuming, and his results were below average. But in the 6 months after learning the system that you're learning today, he made 33% in 6 months, and he was doing very little trading. And I'm going to show you how today. We're also going to talk about Tim. Prior to learning the system, Tim would buy what he thought were good stocks, but he never knew when they were losing momentum. He said he was basically trading in the dark. But again, 6 months after learning the system that I'm going to be showing you today, he said he was on pace to make 30% that year. We'll also talk about Kamel. Kamel said his trading was stupid and undisciplined. But now after implementing a system, his portfolio was up 22% that year. And we're going to be focusing on that system today. So if that sounds good to you, all right, if all that sounds good to you, now is a great time to turn off your distractions. If you have a cell phone, turn it off. That's actually the best thing. Just turn it off. Close your door. Don't multitask. All right? Because if you're multitasking, you're going to miss something. I want you to stay focused and give this your full attention. Okay? Because you're going to be learning something that can make a huge difference in your life. All right? So very quick notes about today's webinar. It is interactive, as you probably already guessed and you've seen. I'm going to ask you a lot of questions throughout today's session. When I ask you a question, type into the chat box. I've got some teammates in the background as well who are answering your questions in the chat, just in case I don't see everything that you type in. I will give you everything I can during this hour that we've got. And so like I said, we got about an hour. Of course, there's only so much we can cover in an hour. I wish we could cover everything in an hour. At the end of today's session, I'll show you how you can get more help to get your investing to the levels that we're going to be talking about today. So if you are good and you're ready to go and you're pumped and you're ready, type yes into the chat box. Let's start this interaction now. And if you type yes, it lets me know that we are ready to talk about how to pick the right stocks. Man, you guys are quick. I see a bunch of yeses flying through. I can't even read all the names. Yeses. Awesome. Let's talk about how to pick the right stocks. All right, because just because a stock might be well known, it doesn't mean you should be the one to own it right now. There is going to be a right way and a wrong way to choose stocks to buy. And I one note, there's a lot of different ways to invest in the stock market. There's day trading, there's swing trading, there's position trading. We're going to be focusing on one technique. It's going to be a very prudent technique. We're not saying other techniques are bad. Some people do those very, very well. We're going to be focusing on one that doesn't take a lot of time for you to do, and it doesn't destroy you emotionally. It's something you could do confidently. All right? So I wanted to get that out there. All right, let's get good at one thing before we try to learn multiple techniques. So let's take a look at an example here of a stock. And what I've done is I zoomed in here. Here's an example, and you might think it's good to buy because maybe it's been going up, but after you buy it, it either goes nowhere or worse yet, it drops. Right? It drops right after you buy it, and you're left wondering what on earth just happened. I mean, you thought you did everything right, but it didn't work. So let's talk about what's the problem causing this to happen. Right, what's the problem that's causing this to happen? Problem number one, and by the way, we're going to be talking about the problems first, and then we're going to be talking about solutions. So let's cover the problems. That way you could say, oh, that's happening to me. That's happening to me. And then we'll say, all right, well, how do you fix those problems? Problem number one is you're buying stocks that were already going down. What you're looking at here, what you see here on the slide, is what I did is I just zoomed out. It's the same stock I showed you just a moment ago, except I zoomed out to give you the bigger picture. And most investors have been trained to buy stocks that look like this, because you might hear about it on TV, or you get some guru saying, or an advisor saying, all right, well, let's buy this stock here. Let me get my little pointer back out. There we go. Let's buy this stock here, and we're going to ride this thing all the way back up. Stocks that are going down typically continue to fall. So problem number one is you're buying stocks that are already going down. Problem number two is you might be buying just for the dividend. My co-coach, Todd Schaefer, and I, we coach people every Thursday on investing, and we call it successful investing coaching. And we hear it all the time from people. They come to our coaching class and they'll say things like, hey man, take a look at this stock, and we'll analyze it with them, and they'll say, but it has such a great dividend. And so they're making a justification of staying in a losing trade because of the dividend. But let me say this, dividends are good. Right? We're not against dividends, but think of it as, getting dividends as a nice little added bonus. But if you focus just on the dividend, if you're just buying a stock because it pays a nice dividend and you're not looking at anything else, you could be really setting yourself up for failure. Because what happens a lot of times is people who do that, they're letting that stock fall like 10, 20, 30, 40, 50, right? 50%, just because it paid a 3% yield. And if you look here on the screen, this stock actually at the time paid an 11% yield. I mean, that's huge, right? But an 11% yield, the stock ended up dropping 62% over the next few months. And I want you to listen to this carefully. If you are making that kind of trade-off, where you're letting a stock drop 40% to get a 3% yield, or 60% to get a 10% yield, you're never going to grow your account consistently. You can't be making that type of trade-off. You're never going to outperform the market either. All right, now problem number three is you buy a stock just for the company's name. Because maybe when you got into investing, you probably didn't know everything, so you bought things that you were familiar with, like Walmarts and Disney's and Apple's or whatever. What you're looking at here is Windstream. At the time when I was putting this together, that was actually my phone and internet provider. When I moved into the house I'm in right now. That might be something that you do. You're like, oh, that's a pretty big company. I do business with them. Let me invest in that. All right? But just because a company is well known doesn't mean it's the right stock for you to own right now. But what's the real problem? So you got those three problems, but the real problem isn't that you're buying stocks that are going down, or buying for the dividend, or buying for the name. The real problem is that you have no buying criteria. And when you have no buying criteria, you're always left saying to yourself, what should I look for? And when you say things like that, when you say, what should I look for? The market will give you a lot to look at. Right? The market has a way of burying you with data, and you're left blurry-eyed. And you spend hours upon hours, and you're still left wondering, like, did I pick the right one? I'm not sure. Did I pick the right stock still? And I got these pineapples here because I ran into that at the grocery store. I think we were at Walmart. Walmart's got the big bin of fruit. My wife had said, hey, go pick a pineapple. I went over and I picked a pineapple. I thought it was good. And she's like, no, you got the wrong one. You got to like sniff the bottom and you got to whatever. There's certain criteria. And I didn't have the buying criteria. I didn't know what that buying criteria was. So hear me on this. I thought I picked a good one. I would have been convinced that I picked a good one. I would have gotten home. And if it didn't taste right, I would have blamed everything else but my pineapple picking ability because I thought I picked the right one. And have you ever been there with a stock where you buy a stock, you're convinced you bought the right stock, and when it goes down, you start to blame everything else except for your stock picking ability? So what we need to do is we need to have the right buying criteria from the get-go when we're buying our stocks, all right? Because when you don't have the right buying criteria, you end up buying stocks and then holding on to bad trades too long. You start saying things like, well, I can't be wrong. Right? I picked the right pineapple. All right? And then eventually you start to say the dreaded, it'll come back, right? You're holding this thing and you just stare at this losing trade in your portfolio day after day. All right, so we need to take a look at the right criteria. So let's look at 3 criteria to use to pick your stocks. What we're going to do here is I'm going to give you the criteria first. We're going to draw it out and you'll write it down and then we'll look at some examples. There's 3 criteria. So if you have a piece of paper, just you can draw a triangle. There's earnings. That's going to be one criteria. There's safety and there's trend. First off with earnings. You want to look at 2 things when it comes to earnings. You want to make sure that the earnings are rising, and not just rising, that they're positive. I want you to become picky because, earnings that are getting less and less negative is an okay thing, but I want you to be picky and pick earnings that are rising and positive. And we'll look at an example soon. Safety, with that one, you want to look for 2 things as well. So you're going to look to get an idea of safety. You can't just look at a short period. You can't just look over the last few months. We got to say, all right, well, it's going up now, but let's expand things out and let's look at how this stock has done over the past year. We always start with a 1-year chart for what we do in successful investing techniques. 1-year chart, expand it out 3-5 years. Or we want to expand things out, and we want to take a look at the price patterns. We'll talk more about price patterns in a minute, but we want to take a look at we're going to look at the earnings over that period. We're going to stretch things out. We're going to look at not just the short term. We're going to look at how things have gone over a longer period. We're going to look at the volatility. The other thing we're going to take a look at is this is a very nice to have. It's not a mandatory thing, but if you had 2 stocks to choose from and one stock was overvalued and another one was undervalued, we're going to favor the one that is under its value. And I'll show you here at VectorVest, we actually have a calculation for value. But we want to, if you're going to pick a stock, favor ones that are undervalued. And then when it comes to trend, there's actually 3 things to look for. You're going to look at the stock's price. And so when we're talking about trend, we're looking at stock's price. We're going to favor stocks that have a smooth and steady price chart. All right, not very jagged. So if I get my pen here, so smooth and steady is going to be smooth and steady. We're not going to get stocks that are like all over the place. Not just smooth and steady, but smooth and steady going up. Right? Smooth and steady could go sideways. That's not great. We want smooth and steady going higher. And the way that we're going to identify that is that it's hitting higher highs. Right? Higher highs and also higher lows. So let's look at this visual. This is look at a stock chart. I took off the ticker symbol so it didn't bias you in any way. So this is ideally when you're pulling up a stock chart. Now this happens to be a 5-year chart. And by the way, a lot of the charts that I'm going to show you will be a 5-year chart, but understand that we usually use a 1-year chart to start and then we expand it out. But to save time, to be very efficient with our time today, we're going to pretty much have 5-year charts. And then you could just, if you want to look at 1 year, just narrow your eyes to the most recent year. When you're looking at expanded time frames, I want you to understand this statement, that what you see in the past is most likely what you get in the future. Here, you're going to see a smooth, steady, virtually like a 45-degree angle, if you remember your high school math. And this is what you want to look for if you're doing a 1-year chart or a 5-year chart. And we're going to go, as if you think bottom left to the upper right, as smooth and steady as possible. So you want it to be kind of hugging that line as much as possible. If you happen to pull up a chart and it's like this, right, jagged, those are things that you can't really sleep at night investing in those. Even though they both kind of get to the same spot, you're not going to be able to sleep at night, and you're not going to hold these things for the longer term, because if these things start to drop, you start to become anxious and you sell it. All right. So let me erase all those drawings there. So we want smooth and steady going higher. And the other thing you'll notice is if I do put, let's see if I can get these on here as close as possible. These are, if it's a 5-year chart, you'll notice that each 1-year segment, it's higher each time. And that you want to look for that, because then it gives you confidence that, hey, if you buy it over the next 1-year time period, there might be some wiggles, but eventually it has a tendency to move higher over time. Right? And then later on in the webinar, we're going to look at when to buy these stocks. But right now we're focusing on what stocks to focus on. And the other thing, that when you buy stocks like this, wouldn't you be proud to, if your buddy asked you, hey, what stocks do you own? And you pull up a chart and you're like, hey, look at this thing. This thing's in my portfolio. Right? You'd be proud of these things, right? Oh yeah, that's in my portfolio. Right? Now, what helps the stock price go higher? Well, it's earnings. I want you to remember, earnings is the engine. You want to make sure the company's earnings are rising and ideally positive, because earnings is the engine that will drive the stock price higher over time. Now, I happen to work for a company called VectorVest. I mentioned that earlier. I like to use in VectorVest. VectorVest has a calculation for earnings. It's a proprietary calculation. So it's a little different than what you might find out there in like Yahoo Finance. But it's a forecast. And the earnings, basically, I'll just sum it up like this. All I got to look for is this earnings to be going higher. Kind of the same as price, where it's going higher over time. It means the company's making more and more money over time. That's like fuel in the engine. That's driving that. It's the engine is strong. So if a stock has a pullback like this, or like this, or like this, it's got that engine behind it that people are like, wait a minute, this is a really good company. Even if it has these pullbacks, it's got that upwards pressure. All right, now, if you don't use VectorVest, actually in the chat box, let me know. Give me a quick yes or no. Yes, you use VectorVest and you're using that, you have that earnings available to you. No, that you don't, and I'm not going to beat you up over the head if you say no. All right, so I see a whole bunch of yeses. I see a no. I see I have in the past. All right, if you say no, there's always a way to take out a trial and see what it's like. I'll tell you about that later on if you want to do that. I'll give you a way to use it. I see a whole bunch of yeses. I see people saying trying it now, says Rick. Awesome. This is a great way to find great companies that are likely to go higher over time. And it really starts to build that confidence that you picked a good stock. Do you remember that stock Windstream that we looked at earlier? I use it as an example because even though it was from several years ago, it's a great example of so many things I want to teach you about in just one example. It was from one of our coaching clients at the time named Steve. When he first came to us, before he went through the training that you're going through here, he came to one of our webinars and he said, hey, what do you think about Windstream? I just bought it 2 days ago. And if I get my little laser pointer out here, you can see down here, 2 days prior to that webinar was that last green candle. And have you ever been there where you buy a stock on the very last up day and it does nothing but drop after that? Yeah, right? That's where Steve was. He's like, what do you think about Windstream? I just bought it. So what Todd and I did, like I said, Todd and I do a coaching group with people every Thursday. The first thing we did is we went through the buying checklist that you and I just went through. And we pulled it up on a chart and we said, all right, Steve, price is hitting lower highs and lower lows. So price trend was down. Earnings was moving down. And in fact, here's that line that I told you that VectorVest calculates of value. In fact, the price of the stock was over its value. So we said to him, we're like, Steve, this meets none of the buying criteria. So you bought it here, right? It met none of the buying criteria. So basically, you should have never bought it. You bought the wrong pineapple, basically. Now, of course, the decision was Steve's, but at that point in the webinar, he was just like, you know what, I'm just going to sell it now. So that was his decision, and it ended up actually being a good decision. The stock then dropped another 10% in the next couple of weeks, and then that's the one that dropped 62% over the next few months. And in fact, I checked this stock not that long ago, and Windstream eventually filed for bankruptcy, and it was, at the time it was trading at 20 cents. Right, imagine if Steve didn't sell it, and you might have been in the same position at one point. You might even still be holding on to a stock like this, where you bought it and you didn't sell it. On each one of these little upswings, you get so optimistic, like, oh, now's the time. Now it's coming back. You get hopeful. All right? What we're trying to get across here in this webinar, in this first section, is if you know the right buying criteria, all of that could be avoided. Right? It could be prevented. So let's do some preventative measures here. And when you follow the checklist, you can do things like this. So I just pulled a few examples from Todd and I track a paper portfolio with our clients. And I just want you to notice the price and earnings pattern. Not necessarily the exact ticker symbols, but just the price and earnings patterns. That, smooth, steady price, rising earnings on the day that we entered it. So using our entry and exit rules that we've got pre-built into what we do, it allowed us to exit with a 25% gain in about a month and a half. That was earlier this year. All right. Here's another one. And again, not the ticker symbol, but look, price was smooth and steady going up. It even was smooth coming down, and then it resumed its smooth uptrend. Earnings, that engine was there. Right? Rising earnings. Again, using our entry and exit rules, it allowed us to get a 15% gain in, again, almost 2 months. Again, that was earlier this year. And then here's another one. I think you're all familiar with Lowe's, right? Lowe's, look at that smooth and steady stock chart. Rising earnings. This one was 23% in 3 months. All right, I think we actually traded Lowe's again since then. All right, so when you combine this, with the right entry and exit rules, you're able to stack winners like this over time. And on the ones that don't work out, you minimize your losses. We'll talk about when to sell later on. That's how you consistently grow your account each year. So let's do it together. Are you ready? Let's do it together. I'm going to show you 10 charts. And all I did is go into the S&P 500, and I just picked 10 stocks that a lot of people buy and sell on a daily basis. I just took off the ticker symbols again because I don't want to bias you. I'm going to show you a 5-year chart. And what I want you to do is just take a piece of paper and make a column for yes, no, and maybe. Okay? Yes, no, and maybe. And remember, you're not deciding to buy it today because this is going to be a 5-year chart. You're just trying to say, oh, that looks like a good candidate. I'll add it to my shopping list. You're picking stocks that you'd like to have in your portfolio when the time is right. I don't want you to overthink it. Just get 3 seconds. Ready? Here's one. 3 seconds, and you can type into the chat box. Is this a yes, a no, or a maybe? This is a 5-year chart. Yes, no, or maybe. Look at all the no's are flying through. Yeah, I wanted to start off with an easier one. This is a definite no. Right? This is a definite no because price over the last few years is coming down and the earnings, the engine is broken. If you see something like this, you just skip it and you move on. How about this one? Yes, no, maybe. Remember, this is a 5-year chart, so probably this part right here is probably about a year and a half. I see a lot of no's. I see a few maybes. All right, so the thing that's probably making you say maybe is earnings going up. All right, but this would be a no. This would be a no because price is not just a a couple of days. I mean, this is lower highs, lower lows, and this is over the span of a couple of years. What about that one? All right, so I see a bunch of yeses. Do you see how these things really stand out to you? Like, this is a great pineapple, right? It really stood out to you because you know the buying criteria. If I just flip back to number 2, if you see that versus this, you remember you're at the eye doctor? Which looks better? A or B? Like, if the eye doctor is saying which one looks better and they're flipping back and forth, you're going to say B, or example number 3, every time, right? Because you got the earnings behind it. And then just very quickly, 4, would be a no, right? Because earnings is now coming down over the past almost a year. Price is really all over the map here, because then the eye doctor will say, all right, well, you got that one, and then you come across this one. You see how these things start to stand out? And this is not the same stock I showed you in example number 3. This is another one. You will find stocks like this, right? And you're like, no, yes, no, yeah, right? All right, so now that you have those 3 columns, I want you to understand anything that you have in a maybe column, I want you to cross out the word maybe and put no, because you should never consider buying a stock you feel maybe about. Quick question. Would you be more or less confident using a system like that, using buying criteria? If you start to buy stocks that meet that criteria, are you more? Just in the chat box, give me a more or a less. All right, so my chat box is filling with more. Yeah, definitely more. And it's important, and you need to listen to this. A big part of being a successful investor is your confidence. And your confidence comes from a system you believe in because you know it works. And you get that confidence because now you're like, man, this pineapple's got all the right criteria. I picked a good one. This is going to taste great when I get home. All right. Do you remember Ross? I told you about him earlier. He actually sent me an email recently telling me about his journey to become a successful investor. He said he was already an experienced investor. He had many years of trading, but he had no system. He spent a lot of money on newsletters. He said what he was doing was haphazard and time consuming. And he's actually prone to over trading. But he was determined to turn things around. What he did is he took this training and even took more in-depth successful investor course that we have. He said he committed to following the system, and he built a diversified portfolio by picking rising stocks in rising markets. He focused on safety and earnings, just like you and I were just talking about. In the 6 months after he started the successful investor system, his portfolio was up 33%. And he hasn't had to do a lot of trading, which was a big change for him. Right? He said he only spends about 15 to 30 minutes a night, which is a lot less than what he used to spend. And he ended by saying he is far more confident and relaxed because he knows what to do and when. Right? Investing, actually, he said it has become fun for him. All right? So I want you to make a shift right now, because one of my jobs today as your coach is to help you make a few great decisions. Your first shift, right, is to go from being uncertain about your stock picks to where you use buying criteria that gives you these high probability stocks, a high probability of success. That's one part of your system, is the way you pick your stocks is one part of your system, and it is needed to help you average the 15% per year or higher. All right, so make that shift right now. You can write it down. Like, I'm going to start to use buying criteria. That should be one shift. Use buying criteria. Number two. Now that you know what stocks you want to buy, you've got to know how to buy them at the right time. Because most people have been taught the philosophy of just buy any old time. Today is as good as yesterday, and today will be as good as tomorrow. So, they say buy any time, but when you buy any old time, it's like, all right, well, I just bought and the market is down 7% from when I bought. And now what does it turn into? It turns into buy and hope, right? Your buy and hold is now buy and hope. So instead, you can buy at the right time and steadily grow your portfolio using these strategies. So what's been so tough recently? Now, this screenshot is of the market. I could just put a screenshot of the last 12 months. I'll need to update that. But this is what the market looked like 12 months ago, and before that. And then it's looked very similar, where the market's just gone sideways. The market's been up, it's been down. Yeah, exactly. Andrew typed in volatility. That's the word of the day, right? It's been up, it's been down, and it seems like every time you get in, the market seems to reverse. You got all the news about what the Fed's going to do. You got the news about the debt ceiling. You got all these things that are making the market go up and then down and up and then down. It's like you're on this portfolio roller coaster, and it feels like every time you get in, the market comes down. But when you're not able to buy at the right time, it feels like every 2 steps you take forward, you take 3 steps back, and you're on this roller coaster ride. And the up part of the roller coaster is like click, click, click. It's like a slow click, click, click. But then when it goes down, it's like vroom, right? Then if you get in at the wrong time, now you're second guessing yourself. Like, oh man, the last time I got in, the market dropped. And I know it seems like I should get in now, but the last time I got in, the market dropped. So I'm going to wait. But then because you waited, you missed out. And then you're in late. So what are some of the problems that cause stocks that you buy to drop? Well, number one, we already talked about, is you might have picked a bad stock. But it's worth repeating, even though we talked about it earlier. One problem for a lot of people is the stock itself. Maybe it was already in a downtrend. It was volatile. Its earnings was dropping. It was just a bad stock. So picking a bad stock is one reason why the stock that you end up buying goes down. All right, so problem number one is you just picked a bad stock, and that's why it drops. Problem number two is actually maybe you just got bad advice. Maybe you weren't confident in your own ability, and you turned on the TV, or you went to a guru or an advisor or whatever, and they give you bad advice. Now, by the way, some of you on this webinar might actually be an advisor. I just want to say this to anybody who is not an advisor. I'm not saying advisors are bad, right? I know this picture makes it seem like, the guy's got evil intentions. I bet that whatever advisors are out there, 99% of them probably have the best intentions. Right? They probably want to help you. But a lot of advisors out there are just following the same philosophy that they've been taught, which is to buy stocks anytime. It's always a good time to buy. Wherever you got your advice or wherever they get their advice, most of the people out there teach it's always a good time to buy. Again, they don't have evil intentions, but they just gave you that advice because that's what they've always been taught. So we're going to look at how to fix that in just a second. Now, problem number 3 is some people think they're cursed with bad luck. What is it? From Charlie Brown? What is it? Is it Linus? Who's it? Pigpen. Is it Pigpen? That's got the like a rain cloud over his head. You feel like you're cursed. You got this cloud over you, and you're like, man, the market. You ever say this? The market gods are against me. Right? If you say that, then you feel that you're cursed. And while there's no such thing as bad luck per se, I will say this: if you feel that you are cursed with bad luck and the market gods are against you, it will cause you to make emotional decisions and do things that you really shouldn't. You'll break a system, you'll break your plan, because you'll say, oh, I just bought a stock and then, oh, now it's down. I got to get out of it. And you sell it. And then it goes back up and you're like, oh man, I shouldn't have sold it. And you start to cause these bad things to happen because you think you're cursed. But the real problem is you just got in at a bad time. Timing is everything. Most of the time, it's just bad timing causing stocks that you buy to go down. Even with market volatility, it's going up and down, you can still get in at a more opportune time. We'll call it the right time. But we need to know what signals to look at. It needs to kind of stand out to us like, hey, enter now. Now's a good time to enter. And you also have to have a signal that says, now's not a good time to enter. Don't enter. All right, so let's look at 3 keys that'll help you decide when to be buying at the right time. All right, number 1, the overall market. The market's got to be in an uptrend. You know the old saying, a rising tide lifts all boats. Well, the same happens in the stock market. If you buy a stock when the overall market is in an uptrend, guess what? You're increasing your likelihood for success. because most stocks are going up and people are optimistic about the market, and most stocks are going higher. So if you happen to buy stock XYZ, there's a pretty good chance that it's going to go up too, because most stocks are going up. However, if you do the opposite, or you ignore the market, if you continue to be buying and the market happens to be falling, the results could actually be disastrous. Now, this is actually a severe case, but it happened to a lot of people. This one's going to be from the global financial crisis, but we heard the same type of thing from people last year during the coronavirus drop. Like Robert here, he actually retired in 2005 before the crisis hit, and he had somebody helping him manage his money, an advisor. And when the market started to drop, he had said we had used professional advisors for our direct shares and a few managed funds to build up our retirement portfolio. And they told us to ride it out. So they're during the global financial crisis, the market's falling, and they're not just riding it out. They're continuing to buy and sell throughout that whole period. And he said he had lost 40% of his retirement. He thought his retirement plans were in ruins, and he thought he'd have to go back out and get a job. Well, we don't want that. So how do we avoid that? Well, we make sure that the market is in an uptrend. And this is a 20-year look at the market. And this was that 2008 time period that Robert was experiencing. The point I'm trying to get across here is it doesn't have to be a financial crisis for you to lose money. There are trends in the market, not just financial crises or coronavirus drops or dot-com bubbles. Right? There are other, let me get my pen back out. During just regular old, uptrends in the market, there's pullbacks. Then there's an uptrend. Then there's a pullback. So there are times when the market goes down. And you just got to know, all right, well, the market's currently going down. I'm not going to buy. I'll just wait for it to go back up. So one of the things I want you to get out of your head is stop trying to nail market bottoms and stop buying on any old day, right? Stop just buying. Because if you buy over here, it's buy and hope, and you're waiting for 3 years for the market to get back to where you bought. Oh, I kind of made a face there. Look at that. I made a pumpkin. Anyway, all right, so I kind of got a little distracted there. All right, so stop trying to nail market bottoms, right? And what you want to do, and this is what we do, is don't try to nail the bottom, but wait for it to start to go up. And then here at VectorVest, we have things called green lights. It says, all right, well, the market is now coming off the bottom. It's safe to buy here. And then as you get these little lights that say, all right, we're in an uptrend, and then eventually the green lights stop and you don't buy anymore. All right, so let me just zoom in. It's probably easier to see here. This is during that last year's coronavirus drop. And this is a period that drove a lot of investors crazy. Right? The market went up, it went down. It went up, it went down. Up and then down, right? Well, you still only want to be buying in uptrends. All right, so some people who don't use a tool like VectorVest might be using things like moving averages to help them, but those could be a little slow and they don't give a daily signal. Like, is today better than yesterday? So this is what we do here, right? Like I said, we use a thing called green lights, and I put those little green arrows on the chart to represent when we give green lights. And you can see the main gist I'm trying to show you here is when the market's going up, that's when you see these green lights. It says, all right, well, today's a good day. Today's a good day. And on those days with the green lights, those are good days. But you see what happened here? There's eventually a last green light. When the market's going down, you see no green lights. Then as the market starts to go back up, I think this green light occurred right in here. So it wasn't on the bottom. You get in, there's some green lights in here. And then eventually you see kind of in here during this little period. I think that this one little green light snuck in right about here. During this down period, one little green light snuck in here. But for the most part, you're getting green lights when the market's going higher. So you want to be buying when the market's going higher. Right, that's the biggest one. Buy when the market is in an uptrend. Number 2 is you got to make sure the stock is in an uptrend as well. And now we did talk about this a little bit earlier. You want to make sure that stock is already doing what you want before you buy it. We already looked at Windstream as an example. I'm going to show it to you again because it's a great example of a certain mistake people make. This stock was clearly in a downtrend. So if you remember, it was Steve. One of the things, in addition to going through the buying criteria with Steve, we had him visualize this stock. We said the definition of a downtrend is lower highs and lower lows. And we showed this to Steve, and we said, this stock is actually, you bought it when it was hitting the trend line. It was in definition of downtrend, and most likely when things hit the trend line, it starts to come back down. So don't buy stocks that are in downtrend. They're most likely going to continue to fall, as Windstream did. Instead, you want to make sure the stock that you're buying is in an uptrend. You're going to start to see, if I start over here, higher highs, higher lows. Now, why is that important? Because it's also easier to manage the position. How is it easier to manage? Well, once it stops hitting higher highs, like here, it hit a lower high, you're on edge. You're like, oh man. All right, so this stock is now, let's forget about if you own the stock. Let's think about whether you are thinking about buying it. If you've got this stock that was in this nice steady uptrend, hitting higher highs, and then all of a sudden it's now hit a lower high, you're saying, now's not the right time. Remember, this section of the webinar is when to buy at the right time. If you see a stock that is now hitting lower highs, you avoid it. You wait for it to start to hit higher highs again. Like there's a higher high, a higher low, and then boom, it starts to break out. And that would have been a better entry instead of just buying any time over here and waiting, I don't know how long that was, several months, for it to get back to where you bought it. All right. And then number 3, now this one you're not going to see on every single trade, but it's important you know how to identify this, is have a stock be clear of resistance. All right. So there's this thing called support and resistance. Like I said, it doesn't come up on 100% of the trades that you do, but if you see it, you got to know what you're seeing. We want stocks to be doing just what you see in this picture, that they're busting up through a ceiling. That way they continue to move higher. If they're not busting up and they just kind of hit their head on the ceiling, douche. Just like if you hit your head on the ceiling, you fall down. We want to bust up through the ceiling. That way we can go higher. We're now walking up here, and we can climb the stairs. We can go higher. All right. Let me show you an example. This is CNC. It was a good stock, right? Look at this. Look at that price pattern. Pretty smooth, right? But then it lower high, lower low, pulled back, and now it's starting to get back up to here. What do some people do? There's plenty of people out there who just buy it right here because they start to see it going higher. Well, if you're unfamiliar with the term resistance, think of it this way. There's a bunch of people who either bought back here or owned it and they didn't sell it back here and they watched it fall. They're saying to themselves, and a lot of people say this, if it ever gets back up to here again, I'm going to sell. And you could see it actually happened a few times. It got near there, it sold off. Got near there, it sold off. Got near there, it sold off. Well, guess what? Got near there again, it sold off. It's like a self-fulfilling prophecy. Instead of doing it that way, here's something that you should look at. You want it to break above resistance. So you have this stock chart, a stock that was good, fell out of favor. Now it's right back up near resistance. It's got nice earnings as well. Remember, that's our buying criteria. All right. This stock started to come back up. It started to straddle resistance, but a nice prudent thing to do would be to wait for a full candle above resistance, because when that happens, there's usually clear sailing after that. All right, so you want it to break up above resistance. So I want to ask you this. We just looked at those 3 keys to buy at the right time. What percentage of the time have you made sure to look for all 3? Just give me a percentage, roughly. I don't, just guesstimate here. Is it 100%? 50% of the time you look for all 3? All right, so see 0, 0, 0, 40, 35. That's almost very exact, Gary. 75, 1% if ever. A whole bunch of zeros. Cebu just typed in 100. I'm seeing 0, 0, 50, 70, 90, 30, 50, 80, 30, 33, 20, 0. All right. If it's anything less than 100, would you agree that there's some work to do? I mean, you got to get it up to 100. You got to be looking for all three things. So I see Keith and Andreas and Victor. Yes. Do you remember I mentioned Kamel earlier? He had said he had no discipline. This is what he would do. He would buy falling stocks in down markets on down days. That's like the trifecta of bad of the things that we were just talking about, right? He did all three things poorly. And then he said he would hope that they would come back after they fell. The downside of doing things like that, when you're using a bad system, that last point there, he started to question his ability to continue investing. Maybe you're there right now, but have you ever been there where you're like, you know what? Maybe I shouldn't do this. Maybe I should just give up. Well, Kamel didn't give up, thankfully. And once Kamel learned the successful investor system to invest, like we've been talking about today, things began to turn around for him. And he wrote to me and he said he's increased his confidence level. In fact, I loved it because Kamel would actually take pictures with his cell phone of his computer screen. And he would send me these pictures because he would come to our coaching each week. And I was like, hey, Brian, check this out. I'm up 22%. You can see his little portfolio over here. He actually had a couple of portfolios. One portfolio was up 22%. He had another one that was up 43%. But the cool thing was, he's like, my emotions are now minimal. I'm not taking any stupid actions. It's less stressful. It's more rewarding. And all of this was due to using the systems that we've been talking about today. All right. And one of the things I did want to point out is this is actually hit on one of his portfolios that was up 43%. Look at his winners versus losers. I was talking to a gentleman before the webinar started, and he was afraid of losers. And I said, no, don't be afraid of losers, because you could still have losing trades. And just like Kamel, he had 11 winners and 10 losers. He was like 50-50. He's like 50-50 in his trading, and he was still up almost 44%. All right, so and that's the thing. You could be 50-50 if you use the right system and the right way to exit trades. So I want you to choose right now. Not knowing when to get in versus using rules in a system that tells you, all right, now is a good time to buy. And instead of choosing to buy any old time and doing buy and hope, you need to use a system like the successful investor system that we're talking about to start buying at the right time so you can start to see that steady climb in your portfolio. Yeah, Keith's like, for sure. All right, because that's the only way you're going to be able to average 15% per year or more. All right? All right. All right. Wherever you are, we're talking about when to sell now. So sit up straight, get focused. This is the thing that most investors have the most trouble with, which is when to sell. Because you might have a trade, a stock that's going higher, and you're like, oh, Brian said wait for it to get above resistance. And you're like, oh, there's a full candle above resistance. I'm going to buy. And it goes higher, and you have this winning trade. But then you don't know when to sell, and you watch that winner turn to a loser. Sometimes those end up being your biggest losses. And once it becomes a loser, you end up holding on to it, hoping it comes back, and you say, oh, I might as well hold on to it now. It's so hard to recover losses when they get big. Now, if you think about it, if you lose 50%, you have to gain 100% to get back to break even. And then that's when you start to feel like a failure. You start to be like Kamel, and you question your ability to continue. So what we need to do is know our exits right from the beginning. Just like when you get on a plane, they tell you how to get off the plane before the plane even goes anywhere. Okay? In actually our full course that we teach called The Successful Investor, we actually have several selling rules built in. We spend about an hour or so talking about just on selling. We've got about 15 minutes, or 10 to 15 minutes here in our scheduled time today. In today's session, what I want to do is I want to give you two big ones, two big rules. that I think will help you immediately as soon as you walk away from today's session. So first off, I want you to make sure that you set your line in the sand. And if the stock hits it, you get out. No questions asked. All right? You got to have a line in the sand. Second, one of the 4 rules that we teach in our full course to help you lock in your profits is to never give back more than half your gains. So let's take a look at using a couple of trades from our portfolio to illustrate those. I could just say those 2 and say, hey, good luck. Those are 2 big ones. Have a good time. All right, so set your line in the sand. Let's take a look at that one. Here's a trade that we did on UVE. It's a very good illustration of setting a line in the sand because the stock looked good, right? It's going higher, popped up, kind of flatlined a little bit, and then broke above resistance. So we're like, yes, everything looks great. Earnings is rising. It meets the buying criteria. So we're setting up the trade, right? So we say, all right, well, this would be our entry. Our desired entry would be here. We set our line in the sand from the beginning of the trade down here. Now, there's a couple of reasons that we set it down here. It's below an area of support, but VectorVest also tracks a thing. We calculate a stop price for every stock in our database. And that's typically where we will set our line in the sand from the very beginning of the trade. So we got into the trade over here, and we're thinking, as with any trade, you're thinking things are going to work out well, but you have a plan for if they don't. Well, guess what? It went up for about a couple of days, and then it turned around, and then it gapped down. Everybody is like their biggest fear is like when stocks gap down. Well, it gaps down, and because we had our line in the sand right here, we exited during the day, right there, and we lost 10% on the trade. So you got to go into it and be like, all right, that stinks. I just had a loser, but you move on. Because a 10% loss is better than what? What's better than a 10% loss? Anything, well, less than 10. What's worse than a 10% loss? Holding it for that. It protects you from having a large loss. Right? Imagine if you held on to it and you're like, oh, it'll come back, and it starts to come back up, and then it goes back down. You're like, oh, well, I'll hold on to it here because last time it went back up and then, right? And now this thing is down at 25 when you should have sold it at 40 something. All right. The other thing, the other big rule that we follow is don't give back more than half your gains. And here's IIN. We actually traded this one a couple of times. Here's one time where we got in here and the stock went up, which was great. And we exited here. So you're like, well, why did you exit there? I mean, the stock went back up. Why did you exit? Well, our rule is to not give back more than half our gains. So if you look, we closed out of this in 2 weeks. We closed out of it with a 17% gain, which means we must have been up about 34% and pulled back, and we unemotionally exited. And you might say, well, why'd you exit? It went higher. Well, it went higher, and we eventually got back in. Remember, all the rules were met. The market was going high. All the rules that we just talked about. We got back in. And we had a line in the sand. We didn't get triggered out because our line in the sand was accounted for volatility. It went higher. It must have been up about 18% or so. And in one day, it pulled back, it hit our stop, and we exited. I bet there's at least one person out there who's saying, well, why'd you exit there? It's just one day. It's just one day. The last time you sold, it went higher. Don't sell it now. Well, we had to follow our rules. You got to follow rules. Imagine not selling, and you watch a stock go from 70 to 20. Knowing when to sell allows you to lock in gains and minimize losses. Exactly, Victor. Victor says, keep the emotions out of it. All right, and this is where Tim was. Do you remember Tim? He took our full course, and after he did, he wrote to me and he said he was on target to do 30%. He said prior to learning the system, he would buy what he thought were good stocks, and he would just hold them for as long as he could. He never knew when they were losing momentum. Right? He held too long and the stock went down. He waited too long and the stocks never came back. And he felt like he was trading in the dark. But after only 6 months, he said he was on pace to make 30% that year. He has the ability to make informed decisions. He actually sets his stops once a week on Sunday night. Now, you don't have to do that. You could check it each day if you want. But his technique was doing it once a week because he was choosing these really prudent positions that we were using the rules we're talking about today. And now he's able to sleep a lot better. All right. So I want to ask you this. If you were to look at your stocks right now, do you know when you would sell them? Like, do you have your line in the sand or your stop in place right now? On all of them. All of them. All right, so I'm seeing yes, no, no. One person says I'm in cash right now. Some of them, no, no, yes, yes, not all. All right. I do see a lot of no's. Those of you who are saying yes, congratulations, pat yourself on the back. Now, the other thing is to make sure that the stop that you do have in place is the right one. But having a stop is better than no stop. But I'm seeing a lot of no's coming in, and that's the thing. I want to help you make that shift of not knowing when to sell and suffering large losses to knowing when to sell. Right? You can choose to place trades without knowing when to sell, which leads to trading in the dark. Right? You might be a deer in the headlights, like, oh, what do I do now? Or you can set the trade up the right way from the beginning and know where to set your stop so you minimize losses and maximize gains. So this is critical. You got to write this down. To be a successful investor, your system must include rules detailing when you will sell. That's how you're going to average 15% or more per year. Remember, your system is the thing that determines your success. And let me just give you a quick little checklist. And as I go through these things, just give yourself like a check or a yes or a no as I go through them. Does your market signal reliably tell you the market's in an uptrend? Now, if you're using VectorVest, hopefully your answer is yes. Like you give yourself a little check on that one because you have those green lights. Are you finding safe stocks rising in price with rising earnings? Like, do you have a way to find them quickly? Which is the next question. How long does it take you? Like, does it take you more time than you want? Like, if you're spending more time than you want, then that would be an X. Do you know how to use stop prices? So again, if you're looking at your stocks and not all of them have stops, maybe that's an X. And another question on stops, are your stops currently helping you to protect profits and minimize losses? Because you might be using stops, but are they helping? So let me ask you this. Out of those 5 things, what did you just learn? If you have a complete system, you would have gotten 5 checks all the way down, like confident checks, like, oh yeah, check, 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 check. In the chat box, let me know, like, how many checks? 3. You can say 1 out of 5, 2 out of 5, 3 out of 5, 5 out of 5, or you can kind of tell me how your system is. So I see a 0, I see a 4, a 2, a 0, a 5, congrats. A 3, a 4, a 3, a 1, a 4, a 4, a 5, a 2, a 5, a 5, a 5, but I lack confidence, a 2, a 0, a 3, a 3. Yeah. So we got to get to where you have a system. That's the third shift, to go from no system to using a system. And that was the big thing for Rick. You know, Rick is another one of our students who learned the successful investor system. And at the time, he was retired. He was retired. And prior to learning the system, he invested on his own. But he said he lost each time. He didn't know what to buy, or when to sell. Hint, that means he didn't have a system. He tried mutual funds, but ended up right back where he started. He said he was just tired of hoping, and he felt like he had no control, which is why he told me, quote, I feel helpless and hopeless. After taking the training and making the shift that we talked about using a system, he's now an investor who's in control and confident. He knows how to find stocks and what to look for. He knows when to sell and how to set stops. In his first month after taking the training, he was up 11.5%. He has confidence and he feels in control of his future. So as you've seen, without the right system, you might be only buying only to see the stock drop right away. You might feel like you're trading in the dark. You don't know which stocks are good, when to buy them, when to sell them, all leading to your account kind of going nowhere, and you're spinning your wheels. You're not growing it as fast as you want to or need to. All right, so today we outline the basics of a system that you can use. And when you have that system working for you, you'll know exactly when is the right time to buy, what stocks to buy, and when to sell them. So that you can start to feel confident and have the ability to be self-sufficient. And you'll know you're able to live a comfortable life and provide for the people that you love. So the obvious question right now is, what do I do next? What's the best way to install this type of system in my portfolio? Right? I want it because it's a simple system. Right? I know we covered a lot today, but it's actually a very simple system you can do in 10 minutes, less than 10 minutes a night on average. Well, I mean, the way I see it is you have a choice to make. I mean, you could say, well, I'll leave today's webinar right now. I'm going to leave today's webinar right now, try it out on my own. I'll go out and try like a system that I think I could do. You'll learn by trial and error, and you might be in the same place this time next year, not getting the results you want. Or option number 2 is you 100% commit to learning the system to become a successful, confident investor this year and begin to consistently grow your account. So if you're ready to do so, I think option 2 is the best choice. The full system that I mentioned a couple of times today in today's webinar is we have a full course called The Successful Investor. 6 weeks to steady growth. It's designed to take you step by step through the system that you need to safely and steadily grow your portfolio each year. The outcome you get from that course is a complete A to Z system which shows you how to grow your account and consistently average 15% per year or more. All right, and like I said, it doesn't take more than 10 minutes a night. Before we get to that, I do want to say one thing. It's only for dedicated people who take their investing seriously and are willing to put time in to learn the system. So if you're not serious, if you're not committed, if you're looking for some sort of magic pill where you're going to become a millionaire overnight, this is not for you. We actually wouldn't want you in the course. This is for serious people who take their investing seriously and are willing to put time in to learn the system. We respect your time and your money and only want people who take it as seriously as we do. By learning this system, you're going to have that step-by-step approach. All right? And so the easiest way to explain it, let me just map it out for you so you can see if it's right for you. I want you to get a full understanding of what this course gives you and how we walk through it. So in module 1, we start out with the strategic game plan. And it's super important to begin with this. You've got to begin with the end in mind. We need to make sure to align your investing style with the overall targets. And the outcome you get from module 1 is clear goals and objectives. You're going to know what type of investor you've been and how to course correct if necessary. All right, module 2 is all about getting into the market at the right time. This is important because the market can be frustrating if you don't know what you're doing. And if you get in at the wrong time, it can be tough and time consuming to make back losses. So the outcome here is you're able to understand and recognize what the market is doing at any point in time. You're always going to know whether it is safe to buy and enter the market. Now, we're not just going to be saying, hey, green light, green light, green light. We're going to be talking about the phases of the market too. So you can understand, we're at a bottoming phase, we're at a trending phase, we're at a topping phase. You're going to understand all the different phases. All right, so there's more to it than just a green light. Module 3 is all about identifying the stocks to buy. And this is important because a lot of people waste hours of their lives digging around looking for trades. And when they're done, they're still wondering if they made the right decision. So the outcome here is you're going to know how to quickly find and identify the best stocks for your trades. Then in module 4, this is the one I was hinting at earlier, where we're going to spend about an hour making sure you completely know exactly how to manage that trade. As I told you today, I could only talk about 2 of the multiple criteria of knowing when to sell. So the outcome here is you're going to know exactly when to sell a stock to minimize your losses. You're going to know if a stock is going for you, what do you do? If it goes against you, what do you do? We're going to show you. It's all rules-based. Then module 5 is all about setting up the trade. All right, this is important because a lot of people buy a stock without putting in any thought into how big of a position to buy, how many shares to get, are they diversified or not. They They don't put any thought into that. So we're going to talk about position sizing, how to manage your risk. You're going to know exactly how to set up that trade from the very beginning. And then module 6 is all about entering the trade, putting your system into action. We're going to give you an easy to follow daily routine, like a daily ritual, a simple checklist so you don't miss a step. The outcome you get from this module is complete confidence and peace of mind because you're going to go into every trade knowing that you're able to implement the entire system. By the time we're done, you're going to have that system we talked about to get steady, consistent gains each year. In addition to the course, we put together some bonuses for you, but first I want to let you know, we believe beyond a shadow of a doubt that this course will get you results. So we offer you a 100% money back guarantee. If you don't feel like your investment in this course will be returned to you many times over while feeling so much more confident in your ability to buy and sell stocks, just show us that you've done the work and we'll gladly give you a full refund. We know that if you do the work, you will see the results. All right, so you have no risk taking the course. All right, let me tell you about a few of the bonuses you get. Someone just typed into the chat box, what about bear markets or down markets? Well, perfect. This bonus is right for you. It's how to protect and profit in down markets. It's one of the 2 extra bonus modules that you get. In this one, we're going to teach you 4 signs to become defensive, 2 ways to ensure your positions so that you don't suffer large losses, and 3 ways that you can actually profit in down markets. Then, if you remember Kamel from earlier, he has now got his portfolio on autopilot. We're going to teach you how you can automate your trading plan. That way you can remove human error even more. You can get alerts when it's time to trade. All right, so in addition to those 2 bonus modules, we want to help you get the best results fast. So we're going to give you, if you don't already have access to it, access to VectorVest. So some of you said you did not have access to it. So if you choose to invest in this course today with us, we're going to give you 60 days to use the tool. Right? We feel it's the best tool out there to find and select stocks, know when to buy. It'll dramatically reduce the amount of time that you spend. So we'll give you a way to try it out. So that way at the end of the course, if you say, hey, yeah, that really helped, you could choose to continue on with it. All right. We're going to, let me just clarify this. We're going to show you in this course how to become a successful investor, plain and simple. And we're going to use a tool to help you get better results faster. So you're still, whether you continue to use VectorVest or not after the course, you're going to be fantastically confident and a successful investor. Using this tool is a way to make it a lot better, right? You get better results faster. All right. And again, at the end of the course, you can decide if you want to keep it or not. And the other thing is you're going to get 6 live mastery support sessions every week. Myself and Todd Schaefer, we're going to be with you, helping you through module by module. All right, so you're going to watch the module, come to the mastery session. We're going to help you implement what you learn so you can get results. If you remember Rick from earlier, these implementation sessions will help you be like Rick, where you can actually start to implement the things we're teaching you. So we're going to guide you through the entire process. And if you can't make it to one, you get all the recordings. Plus, we're going to give you access to our Thursday coaching that we do. So you can we do the mastery sessions on Wednesdays. We'll let you come to our Thursday coachings, and you can see how we're managing our paper portfolio that we track every single day and every single week. You'll see why we're managing the position, or how we're managing the positions, what positions we're in, why we're exiting them, so you can learn how we're implementing the system and how you could do the same. I think that's a huge bonus. All right, so total value is over $1,900. You get all these things I just mentioned. All right, so what is it? Someone just asked, what is it? How much is the class? All right, well, some people say, well, it's a $2,000 class, or it's a $1,000 class, or it's a $500 class. Well, the truth is we probably should charge one of those. You know, it's that good, and the results you can create for yourself are life-changing. We've seen how this course has done that for so many people already. We want you to be able to enroll today and start getting results right away. So we wanted to make this almost like a no-brainer for you. Because is it worth any of those prices? Definitely. Today, The price is only $295 for everything we talked about today. But I've even got an additional discount I'll give you in just a moment. So you're going to be getting the course, the live coaching, the software, the bonus modules, access to our portfolio, all for only $295. But if you order before the end of the webinar, instead of the $295, you can get it for $245. Right? You can get it for $240. You get it, but you have to order before the end of the webinar. The $245 price is even lower than our elite pricing for this course. It's the lowest possible price we would sell this course for. That means you'll get the full course, the 1 year of access to the course, the 6 live mastery sessions, access to the software, the 2 bonus modules, all for $245. If you go to VectorVest.com/TSIC, we'll put that link into the chat box for you right now. That way you can just click on that link in the chat, VectorVest.com/TSIC. That way you can register for the course. Now, if you've taken this course before, like over a year ago, we do have a refresher rate, which you could let our team know about. We actually sent you an email. It's like $95. But that's if you've taken this course before. All right, so check your email. We would have sent you an email with a link in it. Now, after taking the course, I hope you're going to be able to send in comments like this. We actually asked people who took the course, what they would tell you about the course. And John said, it's going to help you make better trades, reduce your losses, and earn more profits with less time. Lucine says, hey man, just do it. The benefits are unbelievable on so many levels. Financially, emotionally, psychologically. Richie says, I've taken several other investment courses, and this one is among the easiest to implement and stay on track. Robert says, it's an excellent course and well worth the money you will spend and likely earn enough in your first trades to pay for the course. Like Rick. Rick made 11% his first month. Danny says, take the course and follow what it tells you. You will not regret it if you're serious about being successful. Now, I want you to think about this. What was your percentage gain over the last 12 months? Or what have you averaged each year over the last several years? Or think of it this way. What did you lose? Are you just getting back to where you were? What's been your average? And what do you want it to be? Are you where you want to be? And here's a key question. Do you have a plan to get there? If you don't, ask yourself what it would cost you not to do this. How much money will you lose in the market? If you keep doing the same thing, you're going to get the same results. Now, ask yourself, how would your life be different if you do this and it works? What if it works? How would your life be different? And remember, the risk is all on us. You have the 100% money back guarantee. We received one of the most amazing letters I've read in a long time. We got it from Don. He sent it to us just last month. He said he left investing for over a decade after his retirement plans got ruined by Bernie Madoff. Recently, he decided to venture back and decided he would make the decisions himself. But he went to places like Reddit and other message boards to pick stocks only to break even at best. He came to the conclusion those so-called experts were only hawking their own interests. He realized he knew little about finding and picking stocks. He started to look into educating himself using VectorVest. After taking our Successful Investor course, Don said he now has the utmost confidence to find, research, set up his trades. And he said the best part is he knows when to get out of a trade, when to sell. He went, in his words, from a stagnant portfolio to making 8.5% in his first month. And this was just last month, around September. He said he sees a more financially sound future as he heads deeper into retirement. Remember, if you order before the webinar is over, you get an additional discount. The price is lower than our elite pricing for this course. You get it for only $245, but you need to order before we wrap up today. We'll be here for about 10-15 minutes. I'm about to get to our Q&A. But before I do, in the chat box, if you know this is right for you and you're ready to join me and Todd in this course, in the chat box, type in 2 words, I'm in. Let us know that you're in, you're ready to join us. Wow, Kaz is ready. Kaz was ready. He says, I just ordered. Thank you. Andrea says, I'm in. Greg says, I'm signed up. Rick says, I'm in. Vinod says, I'm in. Welcome. Ronald is in. Michael is in. All of you are saying I'm in. First off, welcome. Sabu, welcome. Albert, Paul, Danny, please check your email. You should get a welcome email from us with all the dates, all the times of any of the live sessions that we're doing. It'll have all the details in that email. You can get into the course right now and start going through the training material. That way you could start writing down your questions. And when you come to our live mastery, you have questions ready. Hawat says I'm in. Danny is in. Paul's in. Albert. Serdar. Vonda says, I'm purchasing now. Neil says, I just clicked on the link. It says page not found. Here, let me try it too. Let's see. I'm clicking the link. So I clicked on the link and it brought me here. So maybe just try typing it in separately, Neil. Hey, John, welcome. John says, I'm in. David's in. Luis is in the UK. I'm going to have one of my teammates help you out, Luis. You should be able to use the same link. Pardon me, sorry. John says, clicking on the link gives me a page not found. Worked the second time. I'm not sure. 2 people said that, but then you said it worked the second time. Yeah, Howard says, just refresh the page. And so it worked for him. And Neil says, I just clicked on it again and it worked. Woo! Fantastic. There's a ton of you who are saying I'm in. Welcome to all of you. And my team is here answering questions in the chat. Todd and I, and our entire team, John is here. He's on the team. He helps us. Todd is here. Todd's here as well. Todd and I we're really excited to do this because we know that this transforms lives. You saw several of them: Rick, Kamel, Don, Tim. I mean, we got tons of people that we wish we could talk about today. It's not just changing lives financially. That's one thing, but so many of the people we talk to have a shift emotionally as well. Psychologically, it's almost like they become a different person. They sit up straight, or they're so much more confident. They look themselves in the mirror a little bit differently. They're in control. I asked Rick, remember Rick earlier? I asked him, hey, Rick, how do you see what you learned changing your life in the future? And he said, Brian, it already has. He was moving across the country and he had the confidence to say, I know how to invest now. I was planning on buying a certain type of house, but he was able to not go crazy, but he was able to plus up a little bit and get a little bit bigger of a house, or one that met more of the criteria that he wanted, because he now knew how to invest and he saw those gains. So it just changes lives tremendously. All right, now if you've taken the course before and you want to take it again for $95, you can do that. It's if it's been more than a year since you taken the course, just let us know. Ian says I'm in. Shabir is in. Welcome to all of you. Now, one of the common things that we hear from people is, I don't have a lot of time to do this. I'm kind of busy with work. I got a lot of things going on. Or they're worried that, can I do this myself? Because you might be like Rick and some other people who have been using financial advisors for a while, and you're not sure if you could do this yourself. So I want to talk about one person. She still comes to our coaching sessions. Her name is Carol. She was in that exact position. Carol said, I've got no time to manage my investments. She had a money manager making 1% per year for her during a 4-year bull market. And she was fearful of doing things wrong and losing money because, she had no time, because unfortunately, her father had just passed away. She was managing his estate. So she had a lot of things going on, and she was unsure if she could do it. But it was a good thing that she did, because, after taking the course and implementing the systems, she said she's no longer afraid. She had 60% winning trades and has been outperforming the money manager by 8 times. She said she not only has had great financial results, but she has confidence in herself now, and she's having fun. All right, so again, if you order before the end of today's webinar, you get the additional $50 off. You get the lowest possible rate. Now, if you wait until the webinar is over, the price will go back to $295. That reduced price and the live mastery sessions and the coaching sessions, those will only be available until Tuesday at 5. All right, so go to VectorVest.com/TSIC. That stands for The Successful Investor Course. And get yourself registered now before registration closes. Remember, type I'm in if you're in. Like, well, John says, I just registered for the course. Welcome, John. And those of you who are asking about the dates and the times, these are the live sessions that we do. So starting October 20th, we're going to do live sessions on Wednesdays at 4:30. And remember, we're also going to invite you to our Thursday coaching on each of these Thursdays that you see here. This one will be on a Wednesday because this is Thanksgiving and we're closed. All right, so think of that, 2 live sessions with us every week starting October 20th. So you have between now and then to start writing down some questions, but the key date is Tuesday is when registration officially closes, and you won't be able to get all these live sessions. You won't get the reduced price. All right, so if you order now, you get it for the reduced rate of $245. If you wait, it goes up by $50. And then until Tuesday, you can get in at the $295 rate. And once Tuesday at 5 o'clock comes, registration will close. All right. Robert says, I'm in. David says, I'm in. And so great question. I'm going to scoot back one slide here and answer. If you have questions, I see my team has been answering questions in the chat like crazy. The first one I see is from David. And what I'm going to do on my screen is I'm going to put a little flag here. I'll answer David. If you have a question where you're on the fence about the course and you need some information, if you've already typed it in, can you copy it and paste it back into the chat? I will stick around and answer whatever questions you've got. All right, so I'm going to start off with David. David says, I'm in. Can I download the PDFs of the sessions? Definitely, David. Actually, when you get, for every module that we give you, you can download a color version of the slides in a PDF format, or we try to put it in a printer-friendly version, which it uses less ink, like less colored ink. But yes, quick answer is yes, David. You can get a PDF of those slides. Plus, remember, there's checklists and cheat sheets that you can print out as well. Humphrey, today's session, unless you have a question, we're wrapping up here. So we're just answering questions. So just let us know. If you're asking about the mastery session, which Todd just typed you in the chat box, they last, like he said, about an hour. Could go sometime, depending on how many questions we get. Sometimes we've stayed 2 hours answering whatever questions have come in. Dennis says, how much time will I have to be in front at the PC? Now, if you're asking, like after the course, Dennis, once you're implementing the system, you could do it on average less than 10 minutes a night. Now, there might be some days when, like today, we're saying don't buy anything. Where if you let's say you're in cash, Dennis, there's nothing to do, and you just move on. There might be other days where you just there's nothing to buy, and you just have to see if any of the stocks you have to be sold. That's another quick day. A day where there might be more time involved, Dennis, is when you're putting together a shopping list. Maybe that day is 30 minutes. And then you have a bunch of other days that are 2 minutes, right? All right, so but going through the course, probably each module you'll want to spend about 60 to 90 minutes going through it, Dennis. And but if you're just asking about implementation after the course, I think I answered that part. If not, let me know you need more clarification. Victor says I'm in. Welcome, Victor. David says thank you for the response. I say you're welcome. Caesar, I'm going to have my team answer you in the chat because you're asking about a different trading system. That I'll have my teammates help you out with that. John says, I'm in. Welcome, John. Great to have you. Hawat says, when is the course? You're looking at the calendar. So let me go back to that, Hawat, and let me get rid of all this stuff. So as soon as you would order, Hawat, you have access to all of the training videos and all the training materials. So you could go through, if you wanted to, you can go through it all right now. You can spend the rest of the night and this weekend going through all the training material. All right, and what I would recommend is you go through it, you do the homework assignments, you go through the quizzes, and you write down questions that you might have, things that are unclear, things that you need help with. And so you have basically, the next couple of weeks, right, to go through it on your own. And of course, you can call our team. You can call our team and ask questions in the meantime. But Todd and I will officially start meeting with you in a webinar format like this, but it's more for you going through the course on October 20th. And October 20th, we're going to focus our attention on Module 1, where we'll say, all right, you've been through Module 1. Where do you need help? What are your questions? We'll help you with the homework. We're not going to reteach the class because you could just watch the video. All right, so that we'll focus on Module 1 there. We'll have a focus on Module 2 here, 3, 4, 5, and 6. And then also think that we'll invite you to our coaching sessions on Thursdays. The Thursday sessions are at noon Eastern time. And that's where we meet with our coaching clients who typically have been through the course already, and they're just doing weekly maintenance with their portfolio and they need help. So we recommend if you go to those, you could be more of like a fly on the wall for the first few weeks and kind of get a feel for what goes on in those coaching sessions. But you'll be with us for 2 sessions a week if you want to come. Steve says just signed up for the refresher. Awesome, Steve. Great to have you in class again. All right, so if you are a VectorVest subscriber right now, like Itodu is, yes, so if you want to keep your VectorVest subscription, which I assume you do, this course is a course that you would invest in. So you would still have your VectorVest subscription, and then you say, oh, well, I want to take a training course, and you'd get that. Andreas, I'll have, you might want to call our team because you're asking about an options course. You can either call our team or one of our, John or Todd could reach out to you in the chat. All right. Last chance, everybody. If you have a question in the chat, let me know. Remember, if you order now, you get a discount. Go to vectorvest.com/TSIC. Todd and I are super excited to get in there with you. There's a ton of you who said that you're in already. Fantastic. We love going through this course because at the end, it is so amazing to see how many people in the chat have transformed. They're like, oh, I'm so much more. The biggest thing is like they're so much more confident in their ability. Andrea says, thanks, I'm very excited. Awesome. All right, during the course, if you're brand new to VectorVest, we're going to give you, it'll look like real-time streaming data, but it's just on a 15-minute delay. But everything will be ticking. We call it intraday data. So you'll get that. And then after the course is over, and we feel you could do it with an end-of-day service here at VectorVest because we teach you a system where you just look at your portfolio once a night. You could do it at 6 o'clock at night if you wanted to. Oh, Victor, I think I just answered that one for you. Kaz says, I had a question about ProTrader and real-time being included in the 60-day trial of the software. Well, it doesn't come with those. We don't use ProTrader in what we do in this course, and we don't need the real-time data. So if you don't have vectors right now, it comes with the 15-minute delayed data feed. Serdar, welcome. Says, I'm just in the middle of registering. Yeah, we've had people from overseas. You're in the UK? Yeah, we've had people overseas follow along. Definitely. We actually had, in our coaching group and in some of the sessions, people from Australia there as well. So you just have to see if the time zones work out for you, because we'll start the latest session 4:30 our time, which depending on the time changes, 5 or 6 hours difference in the UK. So it might be 10:30 at night. But depends on when you go to bed. Victor, you might need to call our office so they could look at your account, but we would turn on the 15-minute delayed, and then you don't have to download. I assume you already have VectorVest on your computer, so the next time you would log in after we process your order, it would be the intraday version of it. You don't have to download anything new. But Victor, just to be sure, maybe tomorrow give our team a call, and because by then the order would have been processed and all the access rights would have been turned on and everything. But you could talk to one of our team, and that way you have somebody on the phone and you could go through it in case there's an issue or something. David, good question. He says, if all of us do what you teach, we'll all be buying the same stocks at the same time. Definitely not even close, David. No, not even close. Because, for example, like Todd and I, we show a model portfolio that we've got. We've got some stocks in it. But you might be joining now, right? And you'd be like, oh, well, on my buying signal, I'm going to buy this stock. And somebody else, they might already have their portfolio full. So everybody is using the same techniques. But even if you're buying the same stock, it would be on a different day and a different time. Like, it's not one of those systems where like we are all like saying, wait, and buy this stock. Like, we're not doing something like that. As Todd just wrote you, we're trying to teach you how to fish. Todd's like, we won't all get the same catch. Serdar says, can we use the system for different stock markets with the same precision as the U.S. markets? Yeah, this system is what Dr. DeLito, he's the founder of VectorVest. This is how he started VectorVest, buying safe, undervalued stocks, rising in price in rising markets. This is you could do this in any market, because in any market, you're going to have the same signals to look for that the market is in an uptrend. We give you the same analysis for the stocks in your market. Right? Yes, you could do it in whatever market that you're in. Janice says, I'm in. Awesome. Welcome, Janice. All right. So what we'll do now, go to vectorvest.com/TSIC while we're still here. Get that extra discount. Maybe use the extra $50 and say, hey, honey, I just saved $50 and let's go out to eat and celebrate that we just ordered this course. Because then Todd and I will be meeting with you in short order in the next couple of weeks, and we look forward to it. So have a great rest of your day. Have a great evening, a great couple of weeks, a great October, and we will see you at the first live session later on in October. And we'll see you then. Take care. Good night.